Hello and welcome. My name is Declan, and today I'm on the Finviz stock market chart, and I have the 1 week performance open. And as you can see, there's been quite a bit of red this week. Microsoft down 5.33%, Google minus 4.67, Amazon minus 5.84. Tesla wasn't hit that hard. Apple minus 4.02%. The best performance this week was the oil and gas, but everything else, yeah, even the financials, consumer cyclical, consumer defensive, communication services, technology, they've all been down. My shares, I bought shares in Adidas there a few weeks ago, and they're down slightly, about €3 or €4, and the Neo is down slightly as well, whereas they were all in green for a few weeks. And that's the way things have gone. This past week now, there has been a sell-off. So I'll just take you into an article now, which explains the reasons why, and I'll analyze it as well. So why the stock market slumped and what comes next, according to experts. This article is from yesterday. So as alarm over inflation and a possible recession sounded in recent months, a stock market rally offered a source of optimism until this week. Yeah, things changed this week. The S&P fell 2.1% on Monday, its worst day in more than over 2 months. As of trading on Wednesday afternoon, the index had recovered some of its losses but remained down for this week. The recent drop marks the latest swing of this year's market seesaw. That's a good way of analysing things, or seesaw, yeah, swinging up and down. So bouncing back from a historic plunge over the first half of 2022, the S&P 500 rose more than 15% during a 2-month period beginning in mid-June. Over the same period, the tech-heavy Nasdaq spiked more than 17%, and the Dow Jones Industrial Average rose nearly 14%. In fact, that rally makes up the key reason for the downturn in recent days, as investors determined that stocks, a lot of investors determined that stocks became overpriced and began to sell out of their positions. The plunge also stems from a fear that the Federal Reserve will continue a series of aggressive rate hikes. That's the next major problem. The uncertainty over the interest rate hikes, and people are still not sure what way things are going to go. And as I'm just after stating that, people figured, or they analysed and said that the stocks they had were overpriced. So the aggressive interest rate hikes, which aim to slash inflation by slowing the economy, but risk tipping the US into recession. You see, that's the problem. When they aim to slash inflation, slow down the economy, people could end up losing their jobs, and that's what would bring about a recession, because there'll be a lot more people out of work. So it's a balancing act, and it's risky. It's a risky move, but they may have to do that, and that's why there is so much uncertainty at the moment. But analysts differ over whether this week's downturn marks a brief hiccup or a sign of more losses to come. See, from reading this article, you can see they're just as uncertain as everybody else is at the moment over what way things are going to go in the market. Suggested that murky economic data supports varied interpretations about the outlook of the economy and in turn corporate profits, the key focus for stock forecasts. So people don't know what the profits are going to be like for these companies, and therefore they're unwilling to invest in the stocks, or they're selling off the ones that they are in at the moment, and hence why the stock market is dropping for a large amount of companies. Markets don't go up or down forever. The president of the Market Advisory Research, former chief, said, equities division, at some point buyers get exhausted and some new buyers think that things have gotten expensive and are waiting for a pullback. So if stock is overvalued and then there's a sell-off, other people buy the dip, and because it's cheaper, they buy at a cheaper price, and the recovery, as it goes up, that's when they make profits. So that's everyone is analysing it from a different point of view, depending whether you have a long position, a short position, depending on what particular company you have shares in. Yeah, it's a tug of war between the bulls and bears. He had it. For a while, the bears were gaining ground. Over the last couple of months, the bulls gained ground, and now maybe at a standoff for a while. So I'll just explain in layman's terms what bulls and bears mean. When I was learning all about this, all this terminology over the past 2 years, uh, bulls are just when people are buying, say it has a bullish momentum, a lot of people are buying into stock. Bearish momentum, it's selling off. So when they say there's a tug of war between the bulls and the bears, all they mean is there's a tug of war between the buyers and sellers. So that's explained in as best I can. So yeah, I hope you enjoyed this video, and if you did, please give me the thumbs up, and please like and subscribe to the YouTube channel. I'm just a year old as of yesterday on YouTube, so I'll make a video, a 1 year video celebration. But thanks for watching, and take care. Cheers.